Good morning, everybody. Welcome to What's Hot Now here at MarketStream.live. My name is Joseph Cusick with the Cusick Group Securities offered by MoneyBlock. So we're going to go over all of the opening action, and you see the markets ticking behind me. Now, one thing that I want to note is that if you ever want to watch any of the videos, and for whatever reason MarketStream.live is not, you're not able to access it or get into the latest videos, just go to our Facebook page at MarketStream.live or facebook.com/MarketStream. That's facebook.com/MarketStream to get all of our archived materials if you're not accessing the MarketStream.live website. Just wanted to point that out. Taking a look at the Dow Jones after being open now for about the last half hour, we're seeing that there's mixed action. The Dow Jones is down 37, coming off of its worst levels, but it's looking to challenge that 50-day moving average at 20,540. This is going to be a critical level for the intermediate term bulls to hold. If, in fact, we have a break there, that means that institutions could be getting a little bit leery or trimming some potential profits in some of those blue chip stocks. Again, there is a lot of moving parts in this market. You have the Korea Peninsula. You have also mixed action economically speaking. You have also Syria. You have the G7 meeting in Europe and talking about sanctions against Russia. Even though there's some dissent between Italy and Germany, go check out on the Open where we talk about that a little bit more on what's going on in the European indices. But needless to say, there is a lot of action going on, and I think the most prudent thing is to keep your powder dry. And this image right here is why I say keep your powder dry. This is a grind. We have a consolidated market. This is the most frustrating market for traders, for retail especially, and institutional investors and traders. This is something that they look at, and now they have to strategize. This is why they're getting paid to manage your money. And right now, this is a battleground that is not moving at this juncture. We will have some earnings reports later this week. We talked about it in Tech Talk as well as Strategy Now, where we looked at the finance sector. The finance names are going to be reporting on Thursday morning. That is the last trading day this week. It's a shortened trading week. Keep an eye on that because that could move the markets. The JOLT numbers have not moved the markets. The uncertainty index, I've never heard of that, came in at the highest, I think, in years. Came out the highest level that it's been in years. I've never heard of it. For me, my certainty or uncertainty index is the VIX. We'll get into that in a minute. But speaking of the VIX, let's take a look, though, at the S&P 500, which is where the VIX derives its value from. And the S&Ps, the SPX specifically, is down $8 at 23.49. Again, in this battle zone. And for the second time, potentially the third time, it looks like it might be challenging that 50-day moving average at 23.40. We're going to watch this level very closely because that's where the intermediate term bulls could be put on notice. They're going to have to dig their heels in if they're going to hold this ground. One of the catalysts for those bulls could be the financial earnings. That's going to be coming out on Thursday. The NASDAQ continues to be the leader, but it has done something that it hasn't done in almost 2 weeks, which is it's broken its 20-day moving average. That means the short-term bulls are now on their heels. It's trading now at 53.90.50, down 31 points. This is telling me right now the weakness that we saw in semiconductors, and we're starting to see a little bit of weakness in the large cap names. Apple's dragging, Google, Amazon. Let's watch those names because they have been the leaders in this market. Any weakness that's going to be sustained is going to put the short-term bulls on notice, which right now we see with the break of the 20-day moving average. The next level that we're going to watch as far as support is going to be right around that 53.18, 53.20 level. That's going to be the level that you're going to want to watch very closely for the NASDAQ if, in fact, the bears start to get any momentum. Now, what is interesting, though, is that even though we don't have any healthcare reform, even though we don't have any tax reform, the bottom line is that the Russell 2000, that domestically centric index, is now starting to challenge the upside. As we had noted all week long, the level that you're going to want to watch is that 1365 to 1370 level. It's trading at 1368.83, up $1.75. A break above the level of 1370 is going to have both the short and intermediate term bulls starting to grab control in these smaller capped stocks that are domestically centric. In other words, they're sensitive to the economic data that's coming out of here in the United States. If the financials start to show a glimmer of hope that they're going to continue to the upside, that could be a catalyst for the small caps, because that would mean that we could see some new money being pushed into the market. And there is an anticipation that with healthcare, tax reform, and infrastructure, that those things are going to drive some serious growth here in the United States. What has been also notable is vol. Volatility has had quite the range this morning. It's had gone as high as 1550, and it's now starting to scale back towards its lows. Its low is 1420, trading at 1480, up 5.55% or 80 cents. Now, volatility hasn't settled above 13.5 in weeks, if not months. That's what the settlement was. Now trading above 14, above 14 and a half. This is a level that we haven't seen since basically the last time we had a spike, which was a few weeks ago. That's when I had disclosed that we had a volatility position on. That volatility position has subsequently been pulled off. Now we're at levels that we haven't seen in almost 2 weeks. We're going to keep an eye on this. Obviously, volatility is pushing up because of the geopolitical considerations, because of earnings season. There's anticipation of potentially larger moves now because of these binary type events. Some you can forecast for, others you can't. Earnings you can forecast for. South Korean Peninsula, Syria, sanctions in Europe, you can't anticipate for. So the bottom line is, make sure that you're managing your size on your positions accordingly. Speaking of that, look at the crude markets. As I had noted yesterday, that 53.50 level is a level that you're going to want to watch. Well, the high that we got to today was 53.23, and now we've had the crude contract pull back. It's trading at 52.85, down 23 cents. Again, we're going to watch the inventory reports that are going to be coming out tonight and tomorrow. This is a shortened week. These inventory reports for the West Texas contract are going to continue to drive this market. Now, the dollar weakness, as we haven't noted, but we're going to note right now, pulling off of that 101 level yesterday, now trading at its lows at 181 cents, down about 0.2% or 20 cents. Again, that psychological level of 100 on the dollar, if it's broken, over the next few sessions, that weakness is going to potentially help crude if the inventory data comes out better than expected. In other words, if we see a draw or a smaller build than what's expected, both in the API and the EIA, that could draw crude to the upside, specifically West Texas. Now, taking a look, though, at the Brent contract that primarily comes out of the Middle East, that Brent contract is holding up. There's been disruptions in production in Syria. We're going to watch this one very closely. Any further disruptions and also any language that comes out of OPEC about the continuation past June on their production cuts, that could get Brent moving to the upside. We'll have to watch that. But of course, the markets will be watching the storage reports coming out here in the U.S. Taking a look at the bond markets are going to help you get a better barometer of what potentially is going to be continuing to occur in the financials. The 2-year, the 10-year, and the 30-year are all still up in price. This yield curve on the 2-year, the 5-year, the 10-year, and the 30-year is flattening. Bottom line is that we're not seeing bond prices go down. We're actually seeing them hold up or even go higher. That means that the yields in these bonds are coming down. That's a negative for financials. That's going to weigh on this sector. And it's also going to weigh on the uncertainty of whether or not we do actually have, in the short term, the catalyst to continue to move to new highs in the securities market. So we'll keep an eye on that as well. All right, folks, that is it right now for the What's Hot on the Open. Join us at 1:30 Eastern Time. We're going to be doing Strategy Now here at MarketStream.live. I'm going to go over a couple strategies that you're going to need to keep an eye on going into this shortened week. Also, If you want to watch any of our videos, go to either MarketStream.live or you can go to our Facebook page at facebook.com/MarketStream. See you then.